Hi everyone, this is Trisha with Easy E-mini Trade, and I know you haven't gotten a video from me in a long time. Just been a busy, fun summer, and hope it is the same for you guys. I did want to show you some range trades from yesterday on 6E. It was picture perfect, which usually we don't run into mornings like that, but it was too ideal to pass up and not share with you guys. So I am going to get started right now. Okay, so what you're looking at is the 6E, and pre-market is pretty much only time that I trade the 6E, and I will trade it off a 3-range chart. I know that's a pretty small chart, but pre-market it works out pretty well, at least for me it does. So I'm looking at this, and this is 3:30 Eastern. I don't trade at that time, 3:30 a.m. Eastern. I'm still sleeping. But if I was trading at that time, I could look for range trades as well. You'll find if there's not a lot of news coming out, some of the instruments that I do like to trade pre-market will be in a range because of the light volume. So if you're somebody who doesn't have a lot of patience early in the morning, then probably best to just sit it out because it does take some time very often for things to work out. All right, so divergence, I'm not going to go too much into what divergence is. You can search on, do a Google search and just search for divergence in trading, or go to babypips.com and do a search for divergence trades, and you'll see there's a cheat sheet that should pop up. But anyway, looking at the 6E here, you can see I have higher highs in price while I have lower lows on this indicator. And this is just a plain old stochastic. And this is Sierra that you're looking at. So this is a slow stochastic, and the settings that I use are 14 for fast K, 3 for fast D, which is the same as slow K, and then 3 for slow D. I use 80 for overbought, 20 for oversold, and I'm only drawing the slow D line. You can draw them both, you can do whatever you want, but that's the only line that I'm drawing. So what I'm looking for is I'm looking for areas of support and resistance, repeated areas of support and resistance that are continually holding. And when we're sideways, as price approaches those areas again, I can look for shorts off resistance or buys off support. So like I said, I wasn't trading back here, but I know it's resistance because this was the previous day's high. If you use floor trader pivots, I've got a floor trader pivot here above me. Below me here, I have support. This is based on my 15-minute chart at 18,300. So I am looking for divergence at resistance, divergence at support. So this was my first trade here at 6:54 a.m. Come up to resistance. You can see I've got higher highs on price. I didn't do a very good job drawing that line, so let me do a better one. You can see I've got higher highs on price, lower highs on the stochastic. Now, normally I would get in as soon as I see the stochastic roll over below 80, I'd get in under that bar. It's up to you. You can just see divergence and hop right in. But for me, I did not want to get in short above the previous day's high, even though when I look earlier in the morning, I can see it had no trouble getting through there, but I want to be sure. So I get in under this bar. I know support is down in the 18,300 area. This dotted line that you see right here is the 50% fib retracement. So I can use that as a general target if I am concerned that it can't get down and hit the actual support area. But regardless, I'm shooting for my first target somewhere down in this area. Or I can take a little off and ride the rest of my contracts down to support. Totally up to you how you want to manage it. But short here, target down in this area to exit. Comes down to support. You can see I've got lower lows on price, higher lows on the stochastic, looking for the stochastic to get above 20 in this case, and basically I'd wind up getting in above this bar. It's a little hard to see after the fact, or get in above this bar. Either way works, and what I'm hoping to get is a ride back up to the resistance area. So that's what happens. We're able to ride it back up to resistance. I get up there. I have higher highs on price, lower highs on the stochastic. So I can go ahead and I can short this again. You can get in here, but like I said back here, I want to be under the previous day's high, even though it doesn't seem like we're struggling there, just to be safe. Again, my preference. So get in under this bar, looking to ride it to support. Get to support. Once again, I've got lower lows price, higher lows on the stochastic, and I can go ahead and get in above this bar here or this bar, however you choose. And again, I'm looking to ride it up to resistance. Now here, when we make our way up to resistance here, I don't have any divergence. So I'm not interested in trying this again. So basically we got 4 opportunities, just before 7 to just before 9. But you don't want to throw your rules out the window and just think, okay, well, it's up there, so I'm just going to short it. You can see it did work out, but it failed to get down to support. So once it's trading in a smaller range and not actually hitting the areas like down here at support, for example, or even up here at resistance, no longer interested in it unless it creates a new range or reestablishes that it's trading back in this range. So I hope that you find that helpful. And what I do is I like to enter using buy stops and sell stops. So as I see it forming, I can place a sell stop, for example, a tick below the bar that is setting up. So I could place a sell stop a tick below this bar, a buy stop a tick above this bar, etc. So I hope that you find that helpful. If you have any questions, feel free to shoot me an email, and I hope you have a fabulous day.